Hello, investors. I've decided that during these troubling times, now would be a great time to give everyone a behind the scenes look at my investing philosophy for the future. There has never been a time where investing in the right places has been more important. With many stocks having negative returns, putting your money to work in the right investments has extreme benefits. Investing in ETFs like SPY can dramatically lower your overall returns, as the index is full of companies that will do poorly in the bleak future. How does someone invest correctly amid the collapsing economy? Today, as promised, we're going to be going over one of the best investment strategies you can use to survive the upcoming depression. Just a quick disclaimer, this is not personal investment advice. For me, this is disposable income, and I'm more than comfortable with losing my entire balance. Please do your own research and invest only money you're willing to lose. I wanted to diversify as much as possible, and my core philosophy behind the portfolio is trying to make the highest return in a future where inflation runs rampant. Due to the insane printing of money by central banks and congressional bailouts to the tune of nearly $6 trillion and counting. I mean, seriously, who isn't scared by the $250 trillion? The world has been living high on the hog, and it's about to get interesting. Gone are the days of passive investing and kicking back at the beach while you're sipping on margaritas, collecting dividends. In this new investing cycle, dividends are more likely to be cut than to rise. With that being said, let's begin our hunt for high returns. The first investment is Bitcoin. Bitcoin, by design, is a deflationary asset. Bitcoin has had a bad reputation since the 2018 bubble popped. I think it's time to turn the page on Bitcoin's past and look to the future. Let me preface this by saying I'm not one of those crazy investors who always screams Bitcoin is going to the moon. I prefer Bitcoin to increase in price slowly. A slower price increase would stop speculators from jumping in and out and causing a ton of volatility, as we saw in 2018. With interest rates around the world heading toward negative territory, the attractiveness of money has dissipated. Bitcoin provides a brilliant solution to negative rates. While fiat currency is manipulated by central banks through printing, Bitcoin supply is limited. While central banks can move interest rates to cause inflation or deflation, Bitcoin remains fixed. Thankfully, no one can print more Bitcoin. The supply is limited to 21 million Bitcoins. This limited supply will play a significant role in its increase in value over time. Meanwhile, money will decrease in value as central bankers continue to print. Zero or negative interest rates, the printing of money, will farther erode the ability of people to save efficiently. Bitcoin has shown resilience in recent years, and it very well could continue to gain the confidence of more people. Bitcoin's price of $7,800 is proof of its success so far in obtaining the trust of more people. That's why I believe Bitcoin is an excellent hedge to the current system that is failing savers. Next up on my list of investments for a future full of inflation is gold. Gold has a longer track record of being a store of value against paper money. For this reason, gold is second on my list of investments. Consider it a hedge in case I'm entirely wrong about Bitcoin. Gold adds diversification to my investment strategy since it is uncorrelated to stocks. For example, gold was rising in the 1970s while stocks were declining. In 2008, stocks crashed while gold leaped to new highs. Also, gold can protect against both deflation and inflation. During the Great Depression, the relative purchasing power of gold increased. More on this later. Let me first show you how to add gold to your portfolio. While there are many ways to invest in gold, I have chosen to invest in an ETF known as GLD. The price should reflect about 1/10 of an ounce of gold. By the way, these 400-ounce bars right here are worth $690,000. I thought that was astounding. Anyone want to go to the Yukon Trail and see if there's gold? Just me? Okay. Next up, we're going to be investing in a US treasuries-based ETF known as TLT. Why US treasuries? Well, US treasuries provide a great fixed income and have been stable since the founding of the US government. Why TLT? Well, out of all the long-term government ETFs, it's the most liquid. Liquidity is crucial if you ever want to cash out your position. If you're looking for maximum returns, I suggest ticker symbol ZROZ. This is the PIMCO 25-year zero coupon US Treasuries ETF. Now we're going to be looking at adding some long-term bonds. Bonds provide fixed income for the portfolio. They're considered a safe investment as well. My favorite is BLV, which is the Vanguard Long-Term Bond ETF. Okay, moving on to the final part of this investment strategy. We want to pick 3 stocks that represent the future and should continue to grow no matter what the future brings. We could play this 2 ways. One way is the lazy way, which is to just buy the ETF VTI, which is the Vanguard Total Stock Market ETF. While there is nothing wrong with VTI, it is safe to say that during an economic collapse, a lot of the companies in the index are going to do terrible. These negative companies will drag down your returns quite a bit. So I think it's best to pick 3 stocks that have the greatest outlook for the future. Here's the rules to follow to capture the gains of these 3 stocks. Number 1, no selling. Number 2, no selling. Number 3, no selling. That's right. These are a buy and hold investment. That being said, if you prefer to rebalance your portfolio from time to time, it's probably okay to do so. Okay, well, I know you want to know what those 3 stocks are going to be. If you do, hit that subscribe button, smash the like button on this video, and check back next week when I reveal the 3 stocks I'm going to be holding for life.